Hey everyone, welcome to Smart Investing. I'm Albert, and today we're going to talk about the three F's that have been going on. I mentioned one of these F's in the past videos. The second F, I've mentioned it again, and the third F, I will mention it now. So, the first F that I'm going to be discussing is food. Second F, I'm going to be talking about our financials. And the third one is going to be, let me see, what was the third F? I'm trying to think. I apologize. It was food, financial, and the FAANGS. So, yes, we're going to talk about a little bit about FAANGS. I mentioned that a few weeks ago. So, first up, we're going to go into the foods. So, for foods, I know I mentioned foods, but I never really mentioned the companies. So, let's start off with Walmart. If we can see here, this is a food related stock. Again, this is not a recommendation. This is just an example. Even though I do think this is a good stock. So I'm going to just give examples here. So for example, Walmart, again, they're not a manufacturer, but they are a supermarket. They're a superstore. So these are stocks when it comes to inflation, especially I mentioned in the past and in the future, this is a company that's going to do good. These are companies and stocks that are big names, everybody knows, and they still have potential to grow. Yes, they're growing pretty slow, but they're still growing at a good rate. So when I mention food, I mention any kind of food related stocks. So for example, as we can see here, this is a company in the food and retail distribution. This is another sector of food and drug retailing. So you also have food manufacturers. So I'm going to point out just a quick example so you guys can get a really good idea as to what I'm talking about, what I'm referring to, and what stocks that are going to perform pretty good in the couple of months coming up for the forecasting. So these are companies such as, off the top of my head, Dollar General, you have Kroger, which is a supermarket, Ollie's, Bargain. Now, these are food manufacturers, such as cereal makers, such as Kellogg's, General Mills. I'm trying to think. Tyson Foods, they make chicken and stuff and meat products. Companies such as that. So we also have competition from Walmart, other supermarket giants such as Target. You have I'm trying to think of a public stock. So we have Target. Again, like I said, Dollar General. All these dollar stores are going to be good during a recession type stock, and also when it comes to food products. So let's look at the food and retail distribution. Again, I have not gone over this sector yet. I'm dying to go over this sector, guys. Trust me. I just have to finish the banking sector. But I did receive a concern through an email. People wanted to know what to invest in, how to invest in. I can't give price points, but all I can do is pretty much give you a guide. So, example, these are stocks that I think are pretty nice, like this one, this one. Cisco's pretty good. That's a big name. So what else we have on this list? Still loading, and that's about it for the food and retail. Now let's look at the food and drug retailing. So we have, here, like I said, we have Kroger, Cisco. I'm trying to see who else we have here. I don't see many in here. So what I'm going to do is, so I mentioned those three. So we have, let's type in Dollar General. Let's see what kind of company they go under. So again, discount stores, they are still food related products. So again, this one, this one, this one, this one. Like I said, I mentioned this one, mentioned this one, uh, and that's pretty much it. So again, guys, I hope you guys got an idea out of that. And let's look at, like I said, I mentioned Tyson. So again, these are companies that are really, really strong. Food processing and food and tobacco. So we have here, you see this? So we have about 90 companies in the food processing. So right off the bat, I can tell you this is a good one to put on the watch list. Again, I'm not recommending any stocks. I'm just showing you guys what I think are quality companies right off the top of my head, because I've been doing this for years now, so I already know more or less what's good and what is not. This one's a good one. I can't remember if this one, McCormick, is a good company, but we can check them out real quick. They're okay, I guess. So, like I said, I mentioned this one. So yeah, I hope you guys get the idea. I can't go over each and every stock, but again, I hope you guys got an idea in those past few minutes as to what food related stocks will do good and have been doing good in the past few months, at least the last month and the next few months for the second quarter. Those are companies that are under the watch list that I think are going to do extremely well for a recession and forecasting for the next few months. So, moving on to the next F. So, I said food. Now, for financials, again, financial is very broad. But what I do want to mention is, as for financials, it has to be very, very selective. What I mean by that is that there are very few stocks in the banking sector or financial sector. Uh, Financial sector, it could mean banks, banking services, asset management, or consumer lending and the likes. So when we go over those kind of stocks, it's just a big, big list. So again, I've been doing the banking sector like for months now, and I'm trying to finish that off, but it just doesn't seem to end because the list is so long. So for example, this is a decent one for consumer lending and banking services. And, I've mentioned, where is it at? I've mentioned this one. That's a good one. And this is definitely a good one. I have this one on my personal portfolio. So again, I've mentioned that in my long-term portfolio. If you haven't, it's in one of my videos. I'll try to post a link. If I forget, then please remind me so I can put it in there. So again, yeah, so what I mean by selective stocks in the financial sector is just plain and simple. It's just being very, very choosy, picking very, very few stocks in the financial sector that have cash flow and the capacity to withstand a hit in the market, and then also a high quality company. So I do that by evaluating it fundamentally and technically, and then also a little bit of what has been going on in the past for the stock. So again, it's hard to come up with a financial sector list, but as time goes on, once I finish the banking sector, I will be happy to share that with you guys, because there are other sectors related to the financial sector. So again, just choose very, very few stocks in the financial sector. And then the last F that I have is, we're going to be talking for a few minutes just a little bit about the FAANGs that I mentioned. I think I've mentioned those stocks the past few weeks. So let's start with the first one. So the one that I have for the first FANG stock was Facebook. So we're going to be taking a look at Mr. F, which was Facebook. So we have Facebook, and just talking a little bit about the news real quick. So as for Facebook, good news, bad news, and normal. So for Facebook, worst news that I have received about Facebook, honestly, I don't really know why, but we can investigate right now. Again, with Facebook, I ask myself, for Facebook, do they really have potential to keep growing? Honestly, to me, the answer is maybe. Because Facebook over the years has been just doing acquisitions, just taking over companies. And the only one that's pretty popular is Twitter, which Elon Musk is already the owner. So with that being said, I already see a rivalry between Elon Musk and Mark Zuckerberg. Now, that is going to be a fun war to watch between those two CEOs. So we have a CEO war if you have not been paying attention. I keep a lot of eyes on like a lot of everything stocks related. So these two giants are pretty much going head to head for social media. I don't know how well Elon Musk can manage a social media platform, but again, he does have connections overseas. So hopefully, if Elon wants to expand the growth of Twitter, best case scenario, he can, you know, market that outside of the US and have the company grow, seeing as he already has Tesla manufacturers in outside US facilities and US areas and territories. So, normal case scenario for Twitter, for the company, the reason I'm mentioning is because they're a rivalry towards Facebook. And the reason that I say Facebook has a little bit of downside as of right now is because he's competing not just against Twitter, it's because of Elon Musk himself. So with Elon Musk being the CEO of the company, he's just a very popular guy and people like him. So Mark has, he has his hands tied behind his back. So he has a tough competition against the social media platform rivalry. So worst case scenario for Twitter that I believe is that it does not become the free speech platform that people expect. And it does go private faster than expected. And you have to pay a subscription. I don't have Twitter. I don't like Twitter. I don't use Twitter. It's just too personal and too invasive. It's too, intrusive and all that. I don't like people intruding into my privacy. So I think even though Twitter says, it's going to come private, again, worst case scenario, they might start charging a subscription fee, as Facebook still remains the same, not charging anything at all. And that would be a best case scenario for Facebook to grow its company. So moving on from that, we have the two A companies, which is Amazon and Apple. The two uh, main news about Amazon and Apple is that they are not paying their workers enough money, and that has been going on a lot in the northern east cities such as New York especially. So Amazon is 2,787. The bad news that I have for them is that, again, Amazon and Apple, they're not paying supposedly their workers enough money, so they do want to unionize. And then as for Apple, the people that work in the retail stores, again, those are the people that are not making enough money, and the company itself, Apple, is making enough money. So the people that are working for Apple in the retail stores, they're just not making enough money. So that's another talk about being unionized and trying to have a more pay and a fair share of their pay so they can keep up with inflation. So with Amazon and Apple, honestly, I still see a future for Amazon, whether they pay their workers more. Amazon, I still think, has a lot to go. They're a technology company as I see it. Uh, they're into automation. They're just expanding their business so fast and so much that they can do a variety of things. And I see them still focused on future technology. Apple, I don't see a new product that people will want to buy, especially with inflation this high. I think people will want to stick with their phones this year when it comes to Apple. I don't think people are going to wind up paying, $1,200 for a new phone when they can just wait it out a few more years to upgrade their phones. Again, nothing really exciting from Apple. As you can see here, you have like these dips going up and down. So, I mean, there's nothing really exciting, like I said, about Apple in the coming future for this year. I heard rumors about Apple eyeglasses, and you can see your phone through those glasses, but that's all speculation. You know, gotta believe it to see it, kind of deal. So that's just all talk and nothing else. So again, I think Apple is too expensive. I think they're trying to cut costs and lower costs, but it might backfire on them. Again, for the long term, I still think it's an okay company, but for this year, I see it going down with the rest of the FANG stocks. But again, so far the two that I think gonna do really, really good is really Amazon and Google. Those are the only two out of the five that I think are still gonna perform well, even 5 years from now. The other three might be iffy. Facebook might do okay. It won't grow as much, but it'll do okay. In the long term, 5+ years from now. Uh, Apple, again, for this year, I think it'll be okay. And then Apple's getting kind of iffy because, again, they're just pretty pricey. So the next one up is Netflix. So we did the two A's, Amazon and Apple, with the union, people not paying their workers enough money. So with Netflix, I want to show you guys a chart that I saved on my screensaver. And this is a pretty bearish chart. This is a pretty bearish chart, as you can see. That is not normal. So as we can see here, for Netflix, we have Netflix here. So we have Netflix there. As you can see, for the whole year, that is a pretty vicious chart. That is a pretty violent chart. Pretty violent chart. So we have a high in November of about, let's see, let's go over the numbers real quick. So we have a high of about 700, if you want to round it off, around 700. So now we're down to, as you can see, 198. So within 7 months, that's almost $100 difference each month. So if you want to calculate it even more, that's about $80 a month in loss if you bought at the top. Or even if you bought before then, you're still looking about half the value. So you already lost half your value if you invested last year. If you invested in 2020, then that would have been a nice gain. But again, if you invested in 2020, you would have recorded a loss. So what you have gained since 2020 all the way to 2 years later, you would have been at a loss if you still held Netflix. So it sucks to the people that have held this stock. So with Netflix, they have a strong competition. Again, you have other companies such as HBO Max, AT&T, and Warner Media, and Disney Plus. Those are other companies that have gotten into the streaming wars, and I don't think that Netflix is capable of holding their own. But let me tell you something truthful about this dip. The real reason about this dip is because it's not because there's a lot of rumors and a lot of news saying that that Netflix dropped because they lost 200,000 subscribers. That's not really the case. The real reason Netflix has dropped is because of password sharing from other people. Now, out of those 200,000 subscribers, maybe 200,000 people did share their password and they got booted out, or they canceled their subscription and received a warning. God only knows, but that's exactly what happened. A lot of people are password sharing, and pretty much they're seeing Netflix for free. So when that happens, they're losing money. So a best case scenario, a normal case scenario, and a worst case scenario. Let's start off with the best case scenario. Best case scenario for Netflix would be if the person that you are getting the password from, if that person is able to charge you, but then if the password you're getting it from, if they're charging you, they should choose how much they want to charge you. So obviously, if you're sharing your password, it would be fine if the consumer, the person that's already using Netflix, if they could actually earn money from using their Netflix already. So that way they can at least, get some sort of profit. Since they're already losing money sharing their password, it would be helpful if Netflix can create a revenue stream for their consumers. And that, I doubt Netflix will do that, but I think Netflix has the capability to do it. They just wouldn't want to because they want all the money. But that would be a very interesting idea if, you can do that. And then also, if the person you're selling your password to, it shouldn't be the same password that you have. It should be like the person can give you, let's say I have a Netflix subscription, which I don't, and I want to share my password. I should be able to charge for somebody to use my password, but I get to create the password to give that person. I'm not giving my exact password. I should be able to give them a temporary password and share them that password. So basically, I create the password and send it out temporarily. Or Netflix can actually send me a temporary password and I request it so that way I can send it off and then charge that person for it. Netflix should actually choose like a package plan, or if not, the consumer, which would be me, I should be able to choose how much I want to charge that person. There should be like a range, a minimum and a max as to how much I think is fair, or I can choose a price point. Nothing crazy, maybe $1 to $5, because I know subscription is all the way to 15. So why would I charge more than 15 for a password? People are not gonna agree with that. But if it's under the subscription, then hey, who knows? Maybe half the price people might go for it. Maybe $5 for the month to use my Netflix subscription. Who knows? I don't know. I guess people want a cheaper deal. But anyways, I doubt that would be a good scenario that Netflix would want to go with. Normal case scenario would be they keep losing subscribers, but then they charge a fee. Netflix charges the fee, a flat rate fee, for the year for using the password, or a monthly fee for people using the password. Worst case scenario would be every time you use the password, you're getting charged. Whether, let's say you had internet issues and then all of a sudden your internet went down, or the system went down, and every time you log in, it's like they're charging you. So again, that would be a hassle for you, but then Netflix will be making that money because every time you log in, the password is being used. But again, that would be the worst case scenario. If Netflix decides to get like stupid greedy like that, I think people wouldn't like it. And yeah, definitely Netflix wouldn't be in the streaming wars. Yeah, Netflix would definitely lose even more market share because of that. So that's pretty much all I have for you. And the last one up I have is Google. Google is actually, oh yeah, and Amazon as well. Google and Amazon, what they have in common, they're gonna do stock splits this year. So basically, I don't know what the stock split is for Amazon, but for Google, it's gonna be a 20-for-1 split starting in July. So basically, you can get Google for a cheaper share price. So Google, I strongly believe, has a lot of potential growth in the future. Yes, they invade our privacy, and they make a lot of ad revenue. And I know it's tricky to avoid privacy, and a lot of us do enjoy our privacy. But in a way, Google does sort of help you, because if you're a shopper, what I mean by that is, like, if you enjoy your privacy, fine, yeah, just protect it. But Google does help those people that actually want to, like, buy stuff online and stuff, and they generate those word searches, and then, they get into your information and they try to see your searches, and they try to basically sell you advertisements based on what, you already searched. So Google has a funny way of doing that. Way too much, but I wish it was less. But you gotta admit, Google is pretty accurate as to self-advertising for what your likes and dislikes are. So Google does a good job at that. But the privacy, not that good. So that's all I pretty much have for you. I thought I'd want to share that with you guys. I thought that would help a little bit. And I hope you guys have some insight, a little bit more knowledge, and a little bit more, just brainstorming, a little bit more brightness as to brainstorming how you want to approach this market. So again, I mentioned those food stocks and those food related stocks. So I mentioned also in this video a few financial stocks. I gave you the checklist. And then also we talked here about the FAANG stocks. So I try to give you as much information and a little bit as possible. So again, as you can see here, Google is going at a new low for the year. And has more downside to go. So again, thank you guys for watching. I hope you guys have had a good night and a good insight as to more or less what you want to do. So again, thanks for watching, and I'll catch you guys in the next one.